Good afternoon, everybody. Welcome to TraderMerlin Show. Yes, the rally does continue. It is your Wednesday edition. What are we at today? I don't even remember what the day is. That's why I throw it on my screen here. We are on the 12th of June today. Wild, exciting stuff. I think we pretty much knew everything that was going to happen today. The CPI number was a surprise, which we'll talk about here in just a second. So let me bring up my wonderful little graphic here to tell you what the topic du jour is. The rally continues. I think Big Eb's long, and so are many of you as well. Great, we ripped to all-time highs in the S&P, ripped to all-time highs in the NASDAQ. Not the Dow or the Russell, but that's okay. Maybe they'll be there at some point here in the near future. And we even had a leadership change as the most expensive company in the United States. We'll show you all that as we go forward. So let's talk about our rally continuing here. Basically, most of this coming off the heels of a couple different announcements. I'll start off with your first one here, which is Consumer Price Index data. Now, the CPI numbers that came out, it was kind of a wishy-washy going into it. Like, we didn't really know exactly where we're going to stand because we had those weird numbers with the core PCE price index a couple weeks ago. And then before that, the CPI and PPI numbers were completely opposite. One showed inflation, one showed deflation. It left you kind of scratching your head going, well, what in the hell am I supposed to do with all this? So what I wanted to do is show you this one because there was a question that came up at the press conference. And let me zoom out here just a little bit. And we'll go there. So here is your CPI. This is month-over-month CPI going back into 2007. And the only reason I go back that far is to just show you that historically we're kind of right back where we were, down around that 0.2 to 0.3 mark. That seems to be where, if I keep my horizontal line here at 0.2, you notice that most of those points touch that one back in the past. And while the peaks from mid to late 2020 all the way through mid-2022, those are certainly much more elevated, but we haven't really seen any big surges, which is a good thing. Now, of course, the Fed wants to get that back down under control, and that was pretty much what was talked about at that press conference over and over and over. What I want to do, though, is zoom in here because you guys know what the CPI number represents. The annual number represents the last 12 bars worth of data. So I'm going to count backwards from today's bar. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So the estimates for CPI actually increased. And I know that seems a bit strange, but you're like, wait a minute, we're seeing it drop, right? Yes, it's dropping, but in that calculation of CPI, which takes 12 of the last 12 readings, when we get a new piece, it drops off the old one. So that 12-bar window just keeps on moving forward. And notice what dropped off today. We had this one here from June of 2023. That dropped off the books today, and that had an inflationary reading of 0.1%. So we swapped out a 0.1 with a 0. That actually is pretty good. But notice there's a couple others low ones here. There's a 0.2. There's another 0.2 coming up. So the next 2 months are 0.2. Once those fall off the books, now all of a sudden we have this giant one here. So we may see some big bounces in CPI over the next couple months as these readings drop off. Particularly that September 2023 one will be a big one to get off the books because that was back at 0.6. That was one of the highest ones we've had in quite some time. So basically when we get to September, actually let me guess, that will be, if we got this one, this is your June number. Yeah, when we get to September's reading, this will drop off the books. And when that happens, that could actually have a nice pop for inflation. Now, if you listen to the summary of economic projections, which I apologize, I did not have the time to do today. I wanted to take screenshots of the SEP and show those to you so you can kind of see what their forecast was. Most of the voting members of the FOMC see inflation higher by the end of the year, which was kind of shocking because we had such an incredible number today. I mean, look, this is a wonderful drop. I mean, I thought the expectation was a bit much. I thought we might come out at 0.2% on that CPI number. Came out at 0. I mean, totally about faced. And it's only 1 point, right? Certainly there are more pieces to this, but that 1 point data does help because we've replaced a 0.1% gain with a 0% gain. So that's good. Who went short today? Yeah, you got smoked if you did. Well, I guess later near the second half of the session, you did all right if you went short today. So that's your CPI that came out today. Just something to keep an eye on is the expectations that the FOMC members have that we're going to be slightly higher. Not much. I think it was like 3.6 is current, and they're thinking that we'd be at 3.8% by the end of the year. Okay, that's not too much of a stretch, but it is still showing a slight increase, or at least in my opinion, stabilization. But what really factors into that is these bars falling in or getting bigger or lower, and which ones get dropped off of that new calculation. So all in all, here is your year-over-year CPI number, which, when you look at this picture, I mean, if I zoomed into here, right here, we haven't done much. This is the year-over-year change in CPI. Right now, CPI is showing a 3.3% reading. We were at 3.4 a month before that. We were at 3.5 before that. So, grand scheme of things, you would just call this sideways consolidation, or at least I would. We've been really sideways for a year now with regard to those inflationary numbers on CPI. Now, tomorrow, of course, we get that producer price index, or PPI, which may add even more fireworks to this. So that was your first piece of news to talk about, which is that CPI data, which, of course, dovetailed into Jerome Powell and his FOMC meeting. Normally what I do, I've been kind of busy today, but normally what I'll do is I wait till the meeting's over, and then I'll go back and I'll rewatch that piece because I want to be able to pause it and kind of fast forward as I want. I watched it live today, so I didn't get a chance to take as copious of notes as I normally do. But I did pull a couple really interesting things. And as I saw at the very beginning, a lot of you going, what did Powell say? Did he really say anything different, right? Lisa says, did Powell actually say anything? Certainly he said a lot, but he didn't really say anything that was out of the norm. He said nothing that was, there were no words that I saw today that went, ha, that's an interesting point. I mean, really nothing. He talked about the labor force a lot. One thing I found interesting is he did cite immigration as a major factor for increasing labor force, and, of course, obviously that's going to be a election debate when you talk about inflation or immigration coming into the U.S. What else did he see there? He said, I don't think it would be appropriate to cut rates until we have further sustained inflation drop. He said that every meeting for the past year and a half. Let's see, what else was there? He did say that 15 of the 19 voting members, if you look kind of the average block there, it looks like 1 to 2 rate cuts by the end of the year. Now, of course, if we continue to get inflationary data that looks like this and is showing declines, and we start to see this number drop lower and lower and lower, then it does raise the argument of the Fed raising rates. Cutting rates. I don't see that happening except just that one time to kind of just posture and say that you've done it. We haven't seen these inflation numbers drop that significantly. The other piece that Jerome Powell talked about was housing, and he goes, that's a difficult one. And I thought that was an interesting phrase, a way to put it, because he's kind of caught in a conundrum, which you and I have talked about before, where you have an environment where rates have been rising. Of course, they're now unloading their portfolio, which will cause that long end of that yield curve to rise a little bit, and it has. We've had 7% mortgages kind of teetering around that 7% mark, and that's kind of put a pinch on home prices, right? Home prices have been rising, but it's pricing people out of the market. The other side of that is the rents for housing continues to increase. And he's like, it's difficult. What am I supposed to do here? He didn't say that, but it's kind of the gist of what he was saying is, what am I supposed to do here with regards to that? Powell spoiled the party a little bit. I don't know. He didn't say anything that I thought was negative. Everything supported the argument that they've really been sticking to. You got to give it to him. He's been sticking to it, saying, look, we're looking to fight inflation. What he did say a couple of times was he mentioned that they're data dependent multiple times. And I thought it was interesting because, as you guys all know, the Fed's mandate is a dual mandate. It's full employment and stable pricing. But he said inflation isn't our only thing. And then he went on to mention many different macroeconomic pieces, which technically are really not his realm. They shouldn't be messing with that at all. Also pricing people out of the housing market. It's not just pricing them out, but those people, especially on the lower income side of things, they'll never own a home at current rates. I mean, unless you live in a very poor part of the country. But also that inflationary prices, you now have record amounts of debt. And he also talked about the amount. Actually, one reporter asked him, said, we're seeing people not being able to afford the things that they were able to afford before, and now they're running up a lot of credit card debt. Does that concern you? And he kind of dodged that one a little bit and went into, credit card is increasing, debt is increasing, but it's not at really risky levels. Well, at some point it will be if we don't get this under control. So what caused this big pop today? You had obviously the FOMC meeting and that CPI data. Well, that gives me a segue to dive into what happened in our markets today. So I'll go through our top 8, and then I'll go back to some leadership change and a little bit of Q&A here, and then we'll wrap things up. Last place, 10-year bond. We got that 10-year drop significantly today. It had a pretty sharp drop. It shows down just 0.09% or up 0.09%, but that's actually in the new session. If you go off of yesterday's numbers to where we closed out today, we're down about 2.04% on the yield on that 10-year. this is good for the long-term end of the yield curve, right? If you drop that long end, then housing becomes more affordable. At least the bonds that the mortgages you will be buying will be getting cheaper and cheaper. But remember, it's a double-edged sword, right? If this 10-year continues to drop, then mortgages become cheaper and more people will be able to buy homes, and that will drive the prices of homes up. The more that this increases, the more it prices people out of homes, and that could actually push housing prices down. So it's kind of a catch-22 here. Most of us want this to decline because it makes money cheaper and that will stimulate the economy. But then again, that could also really impact the housing market in a negative way and push things to the upside. As Jay Patel says, he said something about Treasury securities will be lowered from $60 billion to $25 billion. I didn't catch that part. I didn't catch that when you talked about the current drop in what those are. But we're going to talk about that with Bill Addis tomorrow. As you guys know, Bill Addis will be on the show. He's my expert when it comes to everything between the lines that the Fed said. So it was a kind of perfect timing to have him on tomorrow, and we'll see exactly what those numbers are. What are they doing with mortgage-backed securities? What are they doing with their 10 years? That'd be interesting if we went from $60 billion to $25 billion. That's a big drop. And that would certainly have an impact on the market and the dollar as well. So that was number 8, was their 10-year. Your dollar index, it recovered off those lows. You saw a pretty big drop today in that dollar index. Of course, this is going to be very interest rate dependent. Ultimately, at the end of the day, we're down 0.53% on the Dixie, closing at 104.69. And I still think that this yellow zone will be in play. I'm going to draw it all out here, extend it further. I did receive a comment about, do I look at the number of times it has approached this level? And I do. I think the more times it hits a zone and stays in that zone, the weaker that zone becomes. However, it's still to be respected at this point. It has not broken it. Until it breaks it, I'll have to respect that line and use that as kind of a catalyst for my market beliefs that when we bounce off this, that'll be bad for the market. All right. Let's go to crude oil. 0.77% gain today. Nothing too shabby. We have a little bit, what might look like a little bit of a shooting star tomorrow or today on today's activity, but not really one that I'm looking at to make trades off of. I don't really see much I'm out there looking to trade off of today. Next on our list is gold, up 1.21%. Nice little bounce off those kind of similar area that we've had those lows back in early May. Really, for 2-3 months, we've just been going sideways in gold after that monumental run that started back here. Right, really started back here in early February, and now we're just kind of traversing sideways. So all in all, I'm okay with that. Let's see, Liz says, but on the contrary, lack of inventory among houses for sale is driving prices up too. Yep, it's a no-win situation. I totally agree, and that he did cite that. He did say, you've got low inventory, and if people aren't selling, you've got more dollars chasing fewer properties. Of course, that's going to drive prices up as well, which, as a homeowner, most of us love that, right? But on the other side of things, you kind of feel bad for those that are being left out of this party. I wish I was as smart as Bill. He might use mine. Yeah, so do I. I don't know, man. I got some smart guests that come on this program. It's a tough one. I think it's tough to say who's my favorite guest. I don't like to play favorites, but Scott McCormick, probably my favorite. Just from an all-around depth of knowledge in almost every asset class, Scott McCormick is just fantastic. Well, I'll see if I can get him on here again soon. All right, moving up our list, we have that S&P 500. There's your ES up 0.81% on the day, screaming all-time highs. We talked about that yesterday with that. Let me delete these lines. Yes, I'll delete that. Get some of these old lines off of here. We talked about it, ripping through these all-time highs, and it did again today. We kind of ended yesterday right at that all-time high. Unfortunately, did not create an opportunity for me. If you look here, let's go to the SPY for a second, because it did on the futures market, but when the markets opened this morning, we'd already gapped up well above my entry price. So unfortunately, nothing was made from a momentum trade perspective for me on that SPY. But you futures ones that were trading early in the wee hours of the morning, you had some great opportunity there. I'll show you what happened on a 5-minute time frame right as that announcement came out this morning. And you can see the rejoicing over that CPI number. We had a huge rally very quick. In let's see, 10 minutes, you had a rally of from about 0.7%, and that's pre-market. So once that market opened up, it had a nice continuation there and then gave it back the second half of the day. Big Eb said, McCormick predicted S&P 6,000 by year-end, right? Did he? I thought I would have put that on the chart. Maybe I did have it on here. Maybe I did. Hold on. No, I don't have it on the chart. I thought I had it put it on the screen here on the ES, but Scott, oh, you mean on our year-end pool? I'll check that. Let me look at that real quick here. Let's go to let's see, where do I have my show? And where do I put that? That's going to be daily materials. Sorry, I'm looking for our list of price predictions that I had for the year. Just never forget where I put that dang thing. All right, well, I'm not sure exactly where I have that spreadsheet. I'll have to find it here a little bit later on. Title, watch list. That's weird. Bottom's right there. All right, well, I'll have to find that one for you a different time. I don't know where I misplaced that piece, but yeah, he may have called 6,000. He may have. All right, next on our list, moving on S&P. Let's go back to our daily time frame here. You had Bitcoin have a little bit of a recovery today. It actually was up much more, gave back almost all those gains today. You saw this nice, it looks like a shooting star, but it's not the top of an uptrend. But this is a very bearish sign for Bitcoin from a momentum perspective. So anybody who is looking at Bitcoin or Bitcoin futures as a potential trade, you might want to keep your eye on this low for today's activity, which was 67,220. We're going to open up that next bar right next to it. And if we start to break down below that, bam. You could see more downside movement here, and it feels like it's just kind of basing along this line, right around where that red line is I have on your screen. So it was a great day for crypto. At one point, let me see here, I had some of my portfolio up like 25%. Oh, LivePeer's still up 25%. That was a great day for LivePeer. Render doing really nice as well. There were much more double-digit gains before this, but only a couple shall stand and survive the test of the markets. Moving on to your second place finisher. We already talked about gold. Third place was gold. Second place is NASDAQ. Of course, this was fueled by continuing rally in Apple. So I'm going to bring this up here because it brings me to the third point for the day, which is a leadership change. Now, it didn't change for long, but you may have noticed at one point during the day, you had a new leader in the biggest market cap company in the United States. We had Apple overtake that lead very briefly, all right? It was well bigger than Microsoft this afternoon, and then I didn't check on close to see if we actually switched, but here is your screener for that. It is a neck-and-neck race. Microsoft just finishing barely by 1.1 or by $11 billion. $11 billion, it seems like nothing, right? $11 billion is the difference between Apple and Microsoft right now, but Microsoft pulling away at the end of the day, keeping that lead. What is noteworthy here is we have now officially 3 companies in the United States over a $3 trillion market cap. I find that absolutely fascinating. Right now you have Microsoft at 3.27, you have Apple at 3.26, and you have NVIDIA at 3.09 or 79. So there we go. Apple overtakes NVIDIA again. Yep, it did. It's kind of interesting to watch these 3 leapfrog and how they're going to be, jockeying for position back and forth over the next few months, because I think that there's just a lot of anticipation and fuel in this argument of AI and driving prices. Yesterday we talked about OpenAI and Apple and what's that arrangement like. I did some digging and I couldn't find the quote-unquote monetary arrangement between OpenAI and Apple. And a lot of people are speculating that Apple is paying OpenAI to use OpenAI and their services. I don't think so. I think, Apple I think they wanted to use Google's platform, and then Google wanted to charge them for it, and Apple said no, and they're going to keep holding that line. I think when the details come out of this, my expectation is that you're going to see that OpenAI did it for free just to have access to the database and get people using OpenAI. Remember, Apple has done this before, where they don't have a good product or service of their own, and they utilize somebody else until they can build one. If you might remember, when Apple first started, they were using Google Maps. So they were licensing Google Maps to use that as theirs on their phones, and then they built their own application and then severed that relationship, but were using another service so they could get there. And that may be what they're doing with OpenAI, because they have all the materials purchased to create their own LLM, large language model, and create their own type of chat GPT, if you will, their OpenAI platform. But they're not there yet. It's going to be a ways till they get there. And they have the materials. They have all the chips from NVIDIA. They can get the software and the tooling to get that up and running and get the developers in there to have their own AI. Then at some point, they can sever ties with OpenAI and have their own protocol. That to me is what's probably going to happen. It's a stopgap. In my opinion, it's a stopgap, which means they can't do it right now on their own. You get something to fill that void for 6 months, a year, 2 years, whatever, until you're fully capable to flip the switch and have your own product in-house from an AI perspective. And I think that's where it's going to go. And I think ChatGPT or OpenAI is looking at it as, we now have access to tens of millions of, hundreds of millions of people around the world with the Apple platform. That's worth it for us. It's not necessarily a lost leader because they're going to be paying overages. You'll be, most likely the way it'll work is you're going to get a certain amount of data queries using OpenAI, and after that, you have to pay for some of those services or maybe make it subscription service off the bat. So it'll be interesting to see what this ultimately turns out to be. But all in all, it's going to be a gold rush for Apple. And I think that's what the market's reflecting today. If you look at why these markets did what it did, particularly the NASDAQ, which is up 1.32%, take a peek at Apple. Now, Apple gave back a lot, but it was still up 2.86% on the day. At one point, if we go from yesterday's closing price to where it peaked out today, it was up 6.3% again. That marks a 14% move in just 2 trading sessions. This really is interesting to show you kind of how Google was third and fourth place in the 2 trillion. Yeah. So those are Class A and Class B shares. They're rounded into the same one. They're just different shares. So it's not like they're doubled. It's a great question, Steve. Yep, thanks for pointing that out. If you look here on that list, let me zoom in just a hair. Good eyes. These are, I forget which one's which, but there's 2 different classifications of shares for Google. I believe, if I'm not mistaken, the GOOG are shares that have voting rights, and GOOGL are the shares that do not have voting rights. And there's a slight price discrepancy between those two. You can see it's a couple dollars per share. But yeah, it's not a $4.3 trillion market cap. It's just they split it into 2. But it's weird. The shares, in my opinion, should reflect their market cap of each one of those shares, but they don't. Billions, trillions, whatever, Big Ab. It all adds up to money someday. All right. So great question there, Steve. You notice that the market cap, it's weird even they show them slightly differently, but it's not a $4.3 trillion market cap for Google. It's only 2.2. Okay. So forgot where I was going with that, but we'll watch this leapfrog. Again, I think this is great for the tech sector. You know, if you're long anything in tech right now, this is awesome. This is going to be, we might see some pretty big gains from here on out. I didn't think that we would have a huge runner yet. I thought we'd start to see something near the end of the year as we got towards the election, but this is certainly going to be one of those catalysts for the whole tech sector, I believe, for a while. Now, not to mean we're going to go straight up. We've already had a pretty significant pop on this, but as Big Eb said yesterday, I don't know if the 18 is going to be released, but the version 18 of the software, so Apple's operating system, will be released later this year, which does integrate those AI features. It will be available to anyone who has the 15 Pro and above models. So if there's ends up being 16, model 17, 18, etc., you'll be able to get those services. But we mentioned yesterday, what a great tactic, because your 14s, your 15s, right? If you have the regular 15 iPhone, you won't be able to use any of these services. So of course, a lot of people are going to go, oh, well, I'm going to upgrade. And again, I think that adds to tremendous bottom line for Apple. Just the number of phone sales, which have been kind of weak over the past couple of years, but you have that coupled with all of the new maybe paid for services with OpenAI, man. Apple's in a good spot. Now, what else rocked out there today? You know, we looked at a couple of different price patterns on the market. This little candle here is going to drive me absolutely bonkers. I wish I could edit this bad boy out, but I can't get it out on this platform. What were we looking at? Oh, we looked at IWM, right? IWM had that, or at least the Russell yesterday had a really nice hammer formation. We had let's go to, there's your Russell. We had that double hammer yesterday. So if you're trading futures, this was a great opportunity for you. I wasn't awake at that time, so I didn't mess with it. Did not get in there. And, you guys have a commercial starting in 10 seconds. Isn't that nice? I'm going to make my 7 cents per commercial break. Woo! 7 cents! Make it rain. Here we go. Commercial break. All right, so I've gone through those top 8 markets. We looked at the leadership change. We looked at the consumer price index numbers. We looked at the FOMC data. Now we'll kind of open it up to what you guys would like to talk about. If there's something you want me to address or look at, happy to do so. There wasn't anything on my radar that really popped today, so not that exciting. I know you guys were talking about Broadcom, which is going to do, what's that, July 15th was their split? I think it's July 15th. Let me bring up the chart here, see if it's on there. So Broadcom, AVGO. This is used to be one of my favorites. I used to trade this thing every single day. Oh yeah, looking nice in after hours. You're up 11% in the after hours right now on Broadcom. There you go. I will map out a horizontal line on the highs here, just so we can go back to the daily and see where we stand long term for Broadcom or Avgo. Wow, look at that. Woo, that is a beautiful jump today for Broadcom. Now, how far out can we go before we see that? This is obviously all-time highs forever. And I wish I would have just held it. Dab nabbit. So having a price of $1,665, that certainly would warrant a split. I believe, if I'm not mistaken, it's going to happen July 15th. I will put a vertical line on here for the split. Remember, it's fairly typical that running into the split, you'll see prices continue to move. Now, the good news is it's not that far away. We're about a month out from that one. There we go. June, it doesn't show it on the screen yet, but it'll probably update in the next couple of days for Broadcom. But I believe July 15th is it. You're talking 10 to 1, which will bust us down to about $160. But we'll see if that continues on all the way through to that split. Now, NVIDIA did not drop. Right? It has not had that follow through that I anticipated based off of based off of the split. So that split happening on Monday. Yesterday was kind of a flat day. Today we jumped up because I think everyone's surging. I still am in the camp of you're going to see a little bit of profit taking here, but right now NVIDIA is just ripping. We're at all-time highs yet again today for NVIDIA. Love it. Use 140 minutes on NVIDIA and the big spikes go up. Well, but yeah, but who uses that type of chart? That's too much. Big spike does go away. That's weird, but I'm also looking at, candles that... Yeah, that's weird. Huh. I wonder why that is. Hopefully somebody over there at wherever they're getting their data feed from at TradingView understands that. We'll get that one fixed here soon. Let's look at it. Enter the Apple walled garden. Features arrived late with Apple. Good features eliminated early. All right. Good. I was going crazy thinking I couldn't find a way to fix that candle. I'll give up. Yeah. Buy the dip. On different platforms, you can. But this isn't really a direct access platform. This is TradingView is a data aggregator. So they allow you to trade through whomever you like. Not whomever you like. Whomever they have relationships with and you can plug into. But yeah, whoever I'm getting that feed from on this daily time frame, that is really weird. 1440 does have it, but the other one does not. Huh, very interesting, Mike. Sorry, Big Up on those puts. Hey, would you rather spend a small amount of money as protection? I think you'd be okay with that. Not a small, probably was a pretty good amount of money, but I think you're probably good. Let's see. What is OpenAI? So OpenAI is the company that created ChatGPT and Sora. So when you look at this drama that's going on right now with Elon Musk, so Elon Musk was one of the original founders of OpenAI, and from his perspective, the original founding statement was that this was going to be a nonprofit company that's for the good of humanity. Now, clearly, OpenAI is going all for profit, and they have a lot of profit potential to be made here. So now they're doing this deal with Apple that gets a much more client base, much more reach, much more hooks in society using ChatGPT and Sora once it comes out. I actually looked this up for you guys the other day. Let's see, it's OpenAI. I will let you play with this one, but this is going to kind of blow your mind. I'm going to click this here, and then I'll send you guys the link. But much like I do with Midjourney, so when I do with Midjourney, like this picture here, I typed in, show me a trader looking up at a stock trading board with a look of concern on his face. Or this graphic here, I said, show Jerome Powell at the FOMC meeting with a bunch of reporters. Or this was just, show me inflationary data over time, and it creates these charts. These are all just, I prompt them in there. I'm prompting these pictures and typing in what I want to see. With Sora, you can type in, you can create movies, right? So I'll give you one example I thought was really cool. Let me see, there's one in here. This one I think is pretty cool. It's going to have to load up here. But you guys can see this video that's on my screen right now. Hopefully, I'm supposed to go full screen. The prompt here is as the camera follows behind a white vintage SUV with a black roof rack as it speeds up a steep dirt road surrounded by pine trees on a steep mountain slope. Dust kicks up from behind its tires. The sunlight shines through the SUV as it speeds along the dirt road, casting a warm glow over the scene. And there's more to it than that, but you just typed that in and it created this. And I'm just blown away at at how this happened. So I'll copy this and I'll post it in the chat so you guys can check it out. There you go. If you want to check out what some of these graphics are, I mean, it's pretty amazing. Even stuff like this. This looks like actual drone footage of someone flying over the Amalfi Coast and taking pictures of Italy. It's going to be weird going forward what this does to society as a whole, right? How many times are you going to go to some influencer's page and they'll be like, oh, I was in Italy last week. And literally, no, they just typed in a Sora to put me on, the Tower of Pisa on the 15th floor of it and have a drone circling around. It'll look photorealistic. It's pretty crazy what this thing can do. But that's the next step from OpenAI. OpenAI is the one that has taken and basically scoured the internet for all this information. It brings it back and then sorts it. It allows it to communicate using all the information that's on the internet, there's some pretty robust information there. The concern we brought up yesterday was that OpenAI will now have access to your personal information that should be behind security walls. OpenAI now can go and browse the internet and go through Google, whatever, and search and pull all the information that's available. But my private emails aren't there. My private photos aren't there. But those will be on Google Cloud and in my different email providers on my iPhone. And do they have access to that? That's the big concern I think a lot of people have. And it says, I need to learn the SoFi saying big bets on it, which could be anything. Merlin, didn't get that one. As I mentioned yesterday, that NVIDIA bad print happened around 4:15 p.m. Eastern. It seems that the TradingView hasn't had it corrected. TradeStation had it fixed this morning. Most platforms that are on it, like that are with it and up to speed, will remove that right away. It's clear it's not there. Other platforms I used to use, like RealTick, I could go and edit the tick data and take that print out. But since this is not a direct access platform, TradingView is not direct access, I don't have that ability to go in there and manipulate the data or change it. Can they put Tom Cruise in? Sure, you like Tom Cruise. They can put Tom Cruise in a movie and you can make him look like 30 years younger. Is that a fee-based service that makes those AI movies, or is it purchased? It's going to be fee-based for sure. And I wonder. I mentioned to some friends earlier and said, if you could do a career path, what would it be? I think it might be studying prompting, right? Prompting. How do you put in information to get that output, right? Inputs versus outputs. That's how these AI programs work. So I know Midjourney, and I use it just basic enough to create you guys fun graphics for the show. But, I could, if I'm a producer, I could go out there and I could, let's see, there was another really funny one here. Like this is all AI. Floating down a river. It says Borneo wildlife on the Kinabatangan River. And, that looks absolutely realistic to me. I don't see anything that looks fake or AI about that at all. And if you're a film producer, what elements can I use of this that now I don't have to film? If I'm doing a movie about cruising down the Amazon, can I just, say, give me Amazon River footage and I want about 15 minutes of it as you drive down the road, or, let's go through Chinatown and I want to have a dragon parade. How much time, effort, money does this save me from a producer perspective? Does this help bottom lines of companies like Paramount and Netflix that might be, doing more and more content? I'm very interested to see what this means for the future of film, etc. There's so, like this one. I think I've shown you this one before. This Wild West town. Tombstone. How much money could they have saved just by using AI? And of course, they have their sets they had to build out in the desert and that type of thing to film Tombstone or Yellowstone or whatever film you want. But think of cost. It costs tens of millions of dollars, hundreds of millions of dollars to make movies. And if I can use something like this and save myself a couple $1 million, man, perfect. OpenAI is private, Michael. Yep, it's private for now. What did I get? Is that people got that one? But can you put that one? Can they put? We got that one. I got Tom Cruise. Sorry, I'm just reading through the questions. Merlin, is it possible to keep the chat and the links you put on this available for after the show? It should show up in the chat. I might actually put a piece on my YouTube or my webpage that has just useful links. I could make that if possible, or links I find interesting. I don't really use my webpage very much, unfortunately. I need someone to manage all that stuff for me. What if I already look 30 years younger? Please, Tom. Please. You already look 30 years younger? Anyway, I thought you guys might like this. You think, oh, it's not photorealistic. Well, that is pretty dang realistic there from a close-up of an eyeball, or some of these are really silly. This one's pretty good too. It's a beautiful homemade video showing the people of Lagos, Nigeria in the year 2056, shot with a mobile phone camera. I mean, at least this does a better job at getting people's hands correct, but it's pretty cool. All right, sorry, I'm drifting off here, but I'll let you know when this one's open to the public. I hope to be first in line for this and being able to use it. I'll probably use it for graphics for this show and create, interactive content, maybe even make some self-paced videos if I have time. I've been thinking about doing that on my page anyways, doing some more self-paced videos, and as opposed to just doing live shows every day. Okay, where were we? We were talking about Broadcom's earnings, which were great. You can see here Broadcom posted $10.79 per share. They were supposed to make $10.79. They came out at $10.96, so they beat by 17 cents, and therefore up 11.8% in the after hours. You had Dave & Buster's missed earnings and getting absolutely crushed during their trading session, but that's pretty much it for the day. Here's what you got cooking for mañana. You have Adobe, which is pretty much the only really big company in here. You can see RH and Signet, but there's no big major market cap ones that are domestic other than Adobe for tomorrow. I don't know why my computer is not working on links. I'm trying to sort by market cap here. There we go. Yeah, you can see it. There's some foreign ones. You got BMW reporting earnings tomorrow, but really nothing here in the U.S. These are all international companies that are listed on the U.S. exchanges, but most people don't trade those companies there. So that's your your earnings calendar for tomorrow. Let's go look at the economic calendar for mañana, which does have a very important piece of data on it. I'm sure you all are aware and know this one. We have our PPI number tomorrow. So there's a couple things going to happen. Of course, the first one being the core PPI number and the regular PPI number. Look at the expectations here. Both are expected significant drops. That month-over-month PPI number expected to drop to 0.1. Based off what happened today, wouldn't surprise me to see it drop to 0. If we go back 12 bars here, let me just show you what that might look like if we count out 12 from current action. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We're actually going to be losing a negative number. So on this reading that comes out tomorrow, we're going to lose a negative 0.3. That actually should slightly pop this to the upside here. Cause that number to be higher than expectation. But again, we'll have to wait and see what that looks like. That's coming out tomorrow. And then for those of you trading the Japanese yen, we'll take a look at some of the yen charts here. There is a rate announcement expected tomorrow. But of course, Japan always does tentative, which doesn't really mean that it's out. It's just tentative, and they'll release when they release. The numbers are interesting because you can see here, they've been flat forever. And then all of a sudden they went from negative 0.1 to a positive 0.1. So getting rid of their negative rate stance, which have been in place for several years now. Here we have back to positive territory, and the question is, are they going to raise it again? I don't think they will. I think they'll wait maybe a couple more months and keeping this at 0.1. But if you look at the yen, let me go to my Forex section here. Let's go to the USD JPY is the only one I have. It really has not done much for the past month and a half. Other than that, it's been on a really big run, just consistently moving, the dollar moving higher and higher against the yen, which of course this is not very good. I don't know if you guys caught that during the press conference as well. I think it was someone from Japan, and he was talking about the U.S. dollar is actually hurting other economies because the dollar is so strong. I thought that was somewhat interesting, but I think a strong dollar is actually good for Japan's economy because we'll buy more of their goods and services at cheaper prices. Makes sense to me. But it did come up in conversation in that today. Rob says no reduction on interest rates. Not yet. Not yet. If you think about where we are at, they could keep it there for a long time and not worry about it. The economy is doing fine. Economy is firing on all cylinders. Everything seems to be going okay. It's not the greatest it's ever been. Certainly not the worst it's ever been. It's not bad. It's okay, So why would you worry about that? Let it just keep on going. Don't mess with the economy at this point by messing with interest rates again. If I'm Jerome Powell, I'm going to encourage my members to let's not do anything. Let's just keep it here. And it may be here for a year or two longer, right? Don't make any changes and see if the economy performs well going forward. If you look at what we have done from a U.S. perspective, let me go back to today. Hold on a second. If you look at what we are doing from the U.S. perspective on our announcement, here is the FOMC rates. Notice how many weeks or how many meetings we've been sideways. 1, 2, 3, 4, 5, 6, 7, 8 meetings we've been stuck at 5.5. That's what they should be doing. To me, this is the right thing to do, is just consistently keep this there. Don't mess with it. Therefore, you can't blame interest rates for being the manipulator of the markets or unemployment or inflation. Just keep it right here. And the only thing that should really modify this is if we have really high inflation. If inflation starts to surge, then you raise it again. But there's not really a strong need to cut. If we look back historically, let's look back into the year 2000. There certainly have been periods where we were this level, go all the way back into 2005, 6, 7, which led to the housing crisis. That's kind of funny. Keep it up there. I'll leave this one up there for you. Sure, no problem. I don't think there's any dire need to come and slash these rates right now, particularly if you look at long-term historical. We're slightly higher, I think, than normal. But unless it really damages the economy, there's no reason to drop this down. We're seeing unemployment numbers stay fine. We're at 3.8, 3.9? Exactly, Rob. I agree with that 100%. If it ain't broke, don't fix it. And here's the problem. When this is like a lesson for the Fed and for us as traders. I think you would all agree. If you have a trading style, you've got your system down. Let's say you've got these 5 things that you focus on. If everything is running fine, then you don't really tweak your system. You leave your system as is. You might make minor adjustments, but nothing to really tweak the system because it's working. You would also not go in there and you wouldn't change something every couple of days, right? You wouldn't change tactic number 4. Thursday I'm using this one, Friday I'm using that one. You wouldn't switch it every day because you get no sense of reading, of how it impacts your overall performance. You might get performance changes for that day, but not long-term. And I think that's what the Fed's concerned with is what's long-term performance going to look like. So make as few changes as possible. If they do make changes, it's not on interest rates, but it'll be on their bond portfolio, right? How much they're liquidating. Right, it went from 95 to 65 and now maybe 25 billion. That's going to be interesting. We'll see. Yeah, Andre says Elizabeth Warren sent a letter to Jerome Powell asking for rate cuts. It's not how it works. That's not how this works. It's funny. Elizabeth Warren, I don't know what she's off a rocker, man. Years ago, I had a lot of respect for her. Now she's kind of just losing my respect. She's kind of off a rocker. You don't write a letter to. And her argument is it's creating higher levels of unemployment. Really? Elizabeth, let me bring up a chart of the unemployment claims for the past several years, which I can't do right now because I don't have it all set up here. You bring up those unemployment numbers, we look fine. Here's the U.S. unemployment rate. We're at 4% right now. We hit 4% on Friday. You're telling me that this is a bad-looking chart? Would anybody here say this is a terrible for unemployment? I don't think so. I don't think that this is actually fine. Is it trending up? Yeah, but ever so slightly. This is back to COVID right here. It's slightly trending up. We've gone back in 2022. We were at 3.6. Now we're at 4. Big deal. Who cares, right? Now, when I zoom out and look at the long-term unemployment numbers, we're very low. Especially if we go back even further. Here's the 2000. 4% is great. So yeah, she's off a rocker to want that. Of course, it's political. Because a rate cut would make the current administration look better. Because the markets would rejoice at rate cut and the markets would surge. And of course, going into the election, they can go, see? Do you see what we did for this market? I think the right course of action, which probably will not be done, is just to hold and not raise. And just keep rates the same until there's something that needs to be fixed with a rate cut or a rate increase. Otherwise, I think we should just keep it right there at our current levels at 5.5%. Just leave it there. Keep it historically, it's very low. Of course, Rob and everybody else, I'm sure most here would love it if we were back down at 0, right? You're like, I'd go refinance. I'd go buy some more properties because, buy with 0% interest or very low interest. Awesome, let's do it. If I can get a 30-year fixed rate mortgage for 2.5% again, I'll push myself to find that property and buy something. I'm a little bit disappointed. I didn't get my property in Big Bear I was trying to get, but it is what it is. Can't win them all. So that's your economic calendar for tomorrow. Of course, the PPI number being number 1 on the importance list. You have the rate cut or rate announcement from Japan, not a cut, but a rate announcement from Japan, which will also be pretty important. So keep your eyes on that one. And from an earnings perspective, I showed you the earnings calendar. We really have nothing on the calendar for tomorrow except Adobe reporting earnings. Other than that, the news will be Bill Addis on our program tomorrow, talking bonds, more detail about exactly what that Fed is doing. He knows far more than I will ever know about bonds, which is why I love bringing him on kind of once every 6 weeks or so. So if you have questions about anything to do with bond markets or just things you'd like to see me do on the show or Bill Addis answer, let us know. Email me at tradermerlin@gmail.com or put them down below any of our YouTube videos, and I will look at those tonight, get them all ready for tomorrow's show. That's it. Thanks, everybody. Have a fantastic remainder of your day. I look forward to seeing you on tomorrow's show. Take care.